What is going on, everybody? My name is Christian Robert, and on this channel we talk stocks, personal finance, and wealth building. Before I jump into the video, you see the price of GE, so if you've been following me, you know I'm getting ready to sell that stock, so that's fun. But 5 beginner stocks for a dividend investor. Now, I've seen several of these videos from YouTubers I love and follow, but I wanted to focus more on dividend perspective. When you're starting a dividend portfolio, there's a lot of different things you want to take into account. I don't want to get too technical in this video because I think my audience is more new to investing, and I want to keep it simple and fun. Investing should be fun. You know, don't get so technical in the beginning. Just learn the basics. You know, dip your toes into a few stocks and just, you know, as you're going, make sure you're learning. But anyways, the first stock is AT&T. Now, this is a stock that we all know. To me, this is a pure dividend stock. It offers a 6.6% dividend yield. I've talked about this in previous videos. But one of the terms I like to look at as a dividend investor is the payout ratio. Now, the payout ratio, just think of it as if a company brings in $100 million in income and they pay out $50 million of that in dividends, they have a 50% payout ratio. Now, AT&T has a 58% payout ratio, which I like. It's a number that can still grow. And I like to keep my payout ratios for my stocks, if I can, under 75%, but different stocks, different scenarios, I bend the rules. So this has 34 years of growing that dividend. Now, if a stock raises its dividend for 25 years consecutively, that qualifies it to be called a dividend aristocrat. We'll talk more about dividend aristocrats in another video, but I love dividend aristocrats. Like I said, a 6.6% starting dividend yield. I think we'll continue to see that raise over time. If you look at a dividend history chart, you'll see that they increase the dividend by 1 cent every year. I think that'll continue for a while. But a lot of investors have been scared off from the stock because they took on a lot of debt with the Time Warner acquisition. So they're sitting on like $180 billion in debt. So I'm not alarmed by that. I saw it as a buying opportunity because if you look at a 1 month chart, this stock was really beaten up. It was in the $27 range. A 6 month chart, you can see that big dip it took. But, you know, buy stocks you're comfortable with. Next stock would be Southern Company. Now, Southern Company, if you don't know, I pulled up the website because I don't want to confuse anybody, but it's America's premier energy company. Company provides clean, safe, reliable, and affordable energy through electric operating companies in 4 states, natural gas distribution companies in 7 states, competitive generation of companies serving wholesale customers across America, and nationally recognized provider of energy solutions, as well as fiber optics and wireless communications. Most of you have heard about this company, I'm sure. Payout ratio of 80.5%. Now, that is higher than I like to be, but for this company, I'm willing to bend the rules. This is actually a company that I'm hoping to add to my dividend portfolio in 2019, either this company or Duke. So stay tuned for that. But 17 years of growing that dividend. It has a starting yield of 5.04%, so that's a great starting yield. They have $47 billion in debt, but nothing too alarming. Most companies carry debt on their balance. But that is really it for this one. Now, the next one is one that some of you might not have heard about, and that would be American Water Works Company. Now, I pulled it up also. With a history dating back to 1886, American Water is the largest and most geographically diverse U.S. publicly traded water and wastewater utility company. You can get into this, but they have services 14 million people in 45 states and Ontario, Canada. They provide safe, clean, affordable, and reliable water services to their customers. It's a water company. Safe and boring. That's what I like. I used to own this stock. I'm hoping to get back into this stock. I should have never sold it, but I made mistakes in my past. Now, this has a 55.7% payout ratio, which is great. They can keep raising that if they choose to, which I think they will. 10 years of growing that dividend. Starting yield of 1.93. So nothing too great, but you will see this number continue to rise in my opinion. So, so far you've seen that I've covered telecommunication, energy company, water company. Now next, if my laptop decides to work, we have Bank of America. Now we all know what Bank of America is. Has a starting dividend yield of 2.07, so it's not too bad, but I think we'll see this number continue to rise. They're sitting on a 23.8% payout ratio, which is really low. So I really think they could attack that dividend and continue to raise it aggressively. 5 years of growing it. They have a ton of debt, but banks carry debt. That's just how it works. When you're in an environment with rising interest rates, banks are going to perform well. With higher interest rates, means their profits just grow because they're bumping up the interest on mortgages and they're making more money off of it. So, this could be a good time for you to get your toes into some bank stocks. I know I'm trying to get more involved in bank stocks in my portfolio. I don't own Bank of America, but I own a few others. I may add this one at some point. But the last stock is a company you all know and love, and that is Apple. Now, Apple has not been performing well. There has been a lot of tension. They haven't been doing great in China. They have lowered their number of iPhones they expect to sell. But you can't look at the short-term perspective of a company like this. They are so much more than just an iPhone. You're going to see this company for a long, long time. So don't get too fixated on, the microeconomic of a company. Think of it, where's it going to be in 5 years? Where's it going to be in 10 years? They're not going anywhere. But they have a 24.8% payout ratio. That is very cheap. I think that they will aggressively grow this dividend, in my opinion. 6 years of growing it so far. Starting yield of 1.9%. Don't even worry about this number because I guarantee you it's growing. They are sitting on a ton of cash, so they could either acquire a business and you'll see capital appreciation, or they will continue to bump up that dividend aggressively and reward shareholders, which I think, given the certain circumstances of its past few months or so, I think they will, really reward shareholders. But that's really it. 5 stocks for a beginner investor. Please keep in mind, I'm not a financial advisor. I'm simply sharing my opinions with you. With buying stocks, there are risks involved, so do your own research. This is just for educational purposes and entertainment. But if you haven't already, check out my channel, subscribe, like the video, and I'll see you in the next one.